it's Doug Katz, your divorce mortgage pro, with another in my series of instructional videos on how to get a mortgage during a divorce or separation. And today I'm going to talk about the different transaction types. Now, many people think there's just two, and in a sense they're right. There's a purchase where you're buying a new home, and there's a refinance where you're restructuring the debt on an existing property. Now, a purchase is really straightforward. But in the case of a refinance, there are two distinct kinds of refinances. There's a refinance where you're just refinancing the existing loan balances, and that's called a rate and term refinance. In many cases, the guidelines are a little bit less stringent, and the terms, like the rate, are usually a little bit better. In terms of the other type of refinance, it's called a cash out. And in a cash out refinance, you're pulling out equity for some reason. Now, the good news is during a divorce, there may be a situation where you're pulling equity out to pay off a spouse in a buyout, but it's looked at like a rate and term refinance, and in terms of that, has better pricing and usually better guidelines, so it's a little bit easier deal to get done. And it has to be directed in the divorce decree that someone's buying out the other, and the underwriters will generally look at it as a rate and term refinance. Now, the time that that's not true is when there's a second lien, a home equity line, or a second loan that was taken out that was not part of the purchase. Now, when it's part of the purchase, you know about people do things like piggyback loans, where they'll do it first and then they'll do a second to avoid paying mortgage insurance. In that case, it's still looked at as a rate and term refinance if you're bringing both of those together as part of the buyout. If, however, that second was taken out after the purchase, maybe to do a project or to cover some expenses, but it wasn't done at the purchase, it's typically looked at as a cash out refinance and will be subject to the guidelines and terms of a cash out refinance. Now, that's not always true, but you generally need to think that way. The best advice I can give you is talk to a qualified, trained, and experienced divorce mortgage professional early in the process to know what type of transaction you have and therefore how to structure that divorce decree. Now, if you have any questions on your situation or other aspects of getting a mortgage during a divorce, go check out my website, www.divorcemortgagepro.com, or you can always reach me at dkatz@divorcemortgagepro.com. I also want to remind everybody that you can take my Split Ready survey at divorcemortgagepro.com, covering not only housing but many other aspects of divorce. It was put together by some great professionals in the divorce industry, and I think it gives a great insight on whether you're split ready. Have a great one. We'll talk to you later, and keep an eye out for more of my instructional videos. Bye-bye.